we are going to discuss about national income analysis. Definitions of national income, concepts of national income, what are the methods for measuring national income, okay, and the measurement of national income in India, what are the difficulties while estimating the national income, and what are the importance of studying this national income or calculating national income. Circular flow, we are going to discuss two-sector model, three-sector model, and four-sector model. Okay. So here, national income, it is the nation's income. It is the total money value of entire the economic activities in the economy. We call it as national income. Total money of all the entire economic activities in the economy, particularly over a period of time, during a specific period of time, generally 1 year when we calculate. So here, the total amount of income accumulating to a country from economic activities in a year, we call it as national income. We call it as national income. So national income of any country, we express with in terms of money. The total income of the country is called as national income. You can say that. It is, one of the most important concept of macroeconomic. Especially when we observe, after the Keynesian revolution, economics, and after the phenomena of Great Depression, 1930s. In the modern era, accounting, comparing to the prediction and the future of the economy at any country is invisible for the policy makers, right? So when we are talking about the national income, it explains the complexity of measurement of all the value of national income, all the values of national income. Economists, different economists that try to explain in a systematic manner. They classified economic activities under 4 sectors, like consumers, individual consumers. C, we express with C. Business investments, investment, I, we are expressing. Government sector, foreign sector, when we talk about exports and imports. So national income defined many professional or many economists with different ways, in different views. More or less, these definitions are giving, same meaning, same meaning. So when we observe the various definitions, let's say, according to Simon Kuznets, according to Simon Kuznets, national income is the net output of commodities and services during a year from the country's productive system into the hands of the ultimate consumers. What does it mean? He tried to explain that, all the final goods during the, a period of time that is 1 year. The productive system to the hands of the ultimate consumers. That is national income. And we can also define national income in different ways. According to National Sample Survey also has given one definition where the money measures the net aggregates of all commodities. The money that measures net aggregates of all commodities and services occurring to the inhabitants of commodity during a specific period of that we call it as national income. National income is not a quantum or heterogeneous as a whole. It is a heterogeneous as a whole. It expressions in the monetary terms, in terms of goods and services which is produced by a country during the period of 1 year. Okay. So when we observe various concepts are there, components of national income, there are different concepts. Some of the important concepts are determinants of national income. Let's say, natural resources which are available to the country. And the second determinant, level of employment of labor, physical human capital available to the country, skills, efficient innovations, this also. And the another one is social and economic infrastructure available to the economy, available to the country. That we know important determinants of national income. What are the determinants? As I said, natural resources are major factor that is influencing the national income. Along with that, employment of the labor, that is also one of the factor. Physical and human capital, which is available to the, for the country.
Sir, which unit, sir? Which block?
అమ్మా యాక్చువల్ గా లాస్ట్ వరకు మనకు అయిపోయినాయి. మళ్ళీ నేను రివిజన్ లాగా సెకండ్ ది స్టార్ట్ చేసిన. ఫస్ట్ ది మొన్న లాస్ట్ తీసుకున్నా.
అవును సార్.
సెకండ్ ది స్టార్ట్ చేస్తున్నా.
ఓకే ఓకే సార్.
సెకండ్ మళ్ళీ ఇది ఇంపార్టెంట్ టాపిక్.
ఓకే సార్.
Yeah, sorry. So these factors are influencing the national income to increase. What are the factors? National resources, level of employment, physical capital and labor available to the country, and efficient and innovative skills also required for increasing the national income. Okay? Social economic infrastructure available to the country. These factors are influencing the, national income. So coming to the components are the concepts of national income. Okay? So there are different concepts are there. One is gross national product, GNP, we call it as net national product, NNP, national income at factor cost, personal income, disposable income, per capita income. Okay, gross national product. Here, the total measure of the flow of goods and services at market value particularly for the current over a period of time. That is generally 1 year, we can say. Okay. So net income from the abroad also included. So in the GDP, what are the components we had? Gross national product, GNP. So here consumption, that is a C, consumption of who, all the amount of goods and services which are purchased by the public. It is nothing but consumers for their wants, for their satisfaction purpose, they want to purchase. So C indicates all the consumptions, the total goods and services consumed by the public. And the investment also included in the GN. Investment. Here, the private domestic investment, which is invested in capital goods, fixed capital formation, residential construction, and inventories on finished and unfinished goods. So how much they are trying to invest, that also included in the investment. Government expenditures, as we know, government's goods and services, which is produced by the government, okay, that related to government expenditure. Foreign trade also included here. Here, the net exports of goods and services, the difference between these two, what does it mean? The variation of exports and imports, we call it as, net foreign trade. If exports greater than the imports, then there is a positive side. If imports are greater than the exports, then there is a negative side, negative impact that you have to remember. So that also included the net foreign income, okay, through the trade, foreign trade. X minus M, we say. X is exports, M is the imports. Okay. So the another one is GDP, gross domestic product. When we take the sum of the total value of output of goods and services in the economy without adding net factor incomes that is received from the abroad. Here we need to deduct the net income which is received from the abroad. Okay? We need to deduct that from the GDP. Okay? So here all the market value of output of final goods and services which are produced in a domestic territory within the country of the country during a year, accounting year. What does it mean? Here in this gross domestic product, we need not to add the net factor income which is received from the abroad. If suppose our people are working there, they are getting about and they are sending to this country for their family remittances. Okay, that we are not included in the GDP. Sometimes the foreigners itself come and work here. That is included in because within the boundary, within the country, it is adding all the final goods and services in the economy. So GDP, we deduct the net factor income which is received from the abroad. That you have to remember. So as I said, X minus M, exports and imports, foreign income, that deducted from the GNP, then we get GDP. In other words, we can say that adding the net foreign income to the GDP. When we add net income received from the abroad, we get GNP. But when we deduct this net income from the abroad, when we remove or when we deduct from the GNP, we get GDP, gross domestic product. That is clear. Next, the another one is, you know, net national product. Net national product. In the production process of GNP, the capital goods are employed, worn out, which are the amount declines, the value of capital goods due to wear and tear. We call it as depreciation. So if we deduct the depreciation from the GNP, okay, GNP, when we deduct GNP from the GNP, the depreciation, what is the depreciation? Wear and tear. If the technology firm is adopted a technology, for example, over a period of time, they are using, for example, for 10 years of period, they still using that machinery. What will happen? That machinery becomes tear and wear. Value becomes decreases, right? So that depreciation value we need to deduct from the GNP. Okay? From the GNP, if we deduct net income from abroad, we get GDP. Same if the GNP, if we deduct depreciation, we get NNP. We get NNP. That is clear. The another one is net domestic product. Net domestic product. Okay. So net domestic product, it is the total money value of all final goods and services produced within the domestic territory of a country during a specific period, excluding the amount of depreciation. Then, so we deduct depreciation from the GDP, then we get NDP. We get NDP. So here you have to remember the depreciation. If we deduct depreciation from GNP, we get NNP. If we deduct depreciation from the NDP, net domestic product, GDP, when we deduct depreciation from the GDP, then we get NDP because it is related to domestic, right? Within the country. So we get NDP, net domestic product. I think it is clear. Coming to the here in this net domestic product, NDP, personal consumption expenditure and goods and services also we need to add. Net domestic private investment and government expenditure of goods and services. Okay, that also included. Coming to the national income at factor cost. Current prices is different. Factor cost is different. So here in this national income at factor cost, what does it mean? Factors cost. So here when we are talking about factors, we need to remember these factors are contributing to produce goods. What are the factors? It may be land, labor, capital, and entrepreneur. These all are factors of production. So all the sum of factors of production, earned income over a period of time. Okay. As we know, land we need to pay rent As we know, for labor, we need to pay wages. As we know, capital, we need to pay interest rate, and entrepreneur, they may get, profits or loss. Generally, we express profit. Entrepreneur will get profit. So, in fact, national income that depicts how much it costs the society in terms of resources to the produce a net output. So it is called as national income at factor cost. How much they are paying to these factors of production in the country over a period of time, but generally 1 year. It is called as national income at factor cost. So here the difference between national income at factor cost, NNP at market prices, arises due to indirect costs and subsidies which place in the NNP net national net income, which is at market prices. Okay, so national income, which is received from the factors of production or factor cost, we need to calculate, we will to get NNP, net national product. We need to deduct the indirect taxes and we need to add the subsidies. Then we'll get national income at factor cost. The another one is personal income. Personal, the word itself is showing person's income, individual's income, right? So personal income is the total money received by the individuals. If we add all the individuals of the country from all the various sources, okay, the payment before payment of indirect taxes in a particular year. So what amount he received, that is, actual income. Okay. So from that income, the personal income is never equal to the national income because, the farmer includes, transfer payments where they are not included in the national income. Personal income is derived from the national income by deducting undistributed corporate profits. We need to deduct personal income. How will get? National income minus security contributions, social security contributions we need to deduct. Corporate income taxes we need to deduct. Undistributed corporate profits also we need to deduct from the national income. But here we have to add transfer payments. Here, transfer payments we need to add. So here we'll get personal income from the national income. Okay. The another one is DI, disposable income. Personal income is different, disposable income is different. So disposable income is nothing but actual income of the individuals after paying all the taxes. After paying all the taxes. If a person is receiving some amount, that is personal income. From that amount, if he pays taxes, maybe direct taxes, okay, after reducing these taxes, actual income is having. So all private individuals, which is ready to spend for their, which is ready for the savings, because after paying the taxes, he is having actual income. With that income, he can spend or he can save the money, right? That is, we call it as disposable income. Disposable income is nothing but actual income after paying the taxes, after paying the personal taxes. But personal income, there is not paid any tax, but received income, okay, from various sources. That is personal. So here, disposable income from the personal income, if we deduct the no, personal taxes, we get disposable income. That is actual income after paying all the taxes. Or we can also say in another way, disposable income is nothing but savings and expenditure. That is disposable income. Why savings and expenditure? With his income, either he can save some amount. With his actual income, he may spend from that actual income. So when we add savings and expenditure together, we get disposable income. So that is the reason why here disposable income we can calculate in two ways. One is personal income minus personal taxes. We get disposable income. Or disposable income we can get while adding the expenditure and savings. Expenditure and savings when we add, we get disposable income. Coming to the per capita income. Coming to the per capita income. Per capita income, it is average income of the individuals of the country. Average income of the people over a period of time. Generally, 1 year, within the 1 year. That we call it as per capita income. That we call it as per capita income. So how do we calculate this per capita income? Here, this concept, it refers to the measurement of income at current prices, at a constant prices. Constant prices as well as current prices, we can calculate the measurement of income of the individuals. It is the average income of the individuals. Okay, average income of the individuals. For example, in order to find out, per capita income of a particular year, for example, 2011 at current prices, the national income of the country, then need to calculate the we need to know calculate the national income divided with the population. How much national income is there of a particular country? From that, we need to divide with the population. Then we get per capita income. Per capita income is the average income and standard of living of the people. We can calculate easily. So, unfortunately, it is not reliable because every country, due to unequal distribution of national income, major portion goes richer sections, the society that the receives a common man receives very less amount of money. So due to this reason, there is a imbalancing. There is a unequal distribution of national income. That is the another reason. There are various methods are there while estimating the national income or calculating the national income. One of the important method is output method. One of the important method is output method. So output or production method of estimation of national income, we call it as value added method. Output or production method. The estimation of national income is called as value added. So in this method, particularly in this output method or production method, the total value of all the goods and services produced in the country. When you are talking about all the goods and services, that goods and services are final goods, which are ready to use, that we call it as final goods. Okay? In a particularly over a period of time. So that is 1 year. To find out the GNP, the data of all the productive activities we need to collect, in terms of agriculture, wood which is received from the, forest, minerals, mine, commodities, industries, constructions, so transportation, communication, okay? Service also included insurance companies, communication, lawyers, doctors, teachers, which are collected and assessed at market prices. We need to collect the information, we need to collect the data, we need to assess at market prices. So only final goods and services, which included here, and intermediary goods and services are not included here. Intermediary goods and services are not included. What does it mean? Semi-final goods, which are under process producing the commodities, or sometimes that particular good may be involved to another for producing the final good. Okay? Semi-final goods are not included in this output method. Semi-final, as you know, which are not final commodity, which is not ready for the use. That is not included in the output method or production method or value added method. That you have to remember. The another one is income method. Income, which is net income payments which are received by all the citizens of the country in a particularly year. When we add together all the citizens, we get net income. So all the factors of production by the way of the rents, interest rates, wages, profits, factors of production, as I said, right? So when we add all these together, but income received in the form of transfer payments are not included yet. We should not include the transfer payments. That is to remember. The another one, the income which are obtained from the abroad or different sources. Okay. Maybe income tax department in respect of high income groups, in case of workers from their wage bills, from their wage bills. So national income, wage, we can add here wages and salaries, rent, interest rate, distribution profits, and distributed profits by the corporates or corporation. We need to add depreciation here, mixed income, taxes. Okay. Net national income also we add. So there are some paradoxes in computing the national income by income method, because capitalistic form of the economy, traditionally the value of goods and services are exchanged in the market or included in the national income. The income, the persons, they may get themselves not estimated. That is one. So from this income method, we are adding all the payments of factors of the country over a period of time. Land, labor, capital, organization, as I said, these all are the factors of production. Okay, they are receiving the income, right? Labor, they are getting wages. Land, it is getting rent. Capital, maybe, what we call interest rates. Organizers or organization, they get, profits, right? So income method measures from this side when we are adding together all these factors of production's income. The another one is expenditure method. In this method, the total expenditure incurred by the society in a particular year, we added together and included personal consumption expenditure, net domestic investment, government expenditure on goods and services, and net foreign investment also. Here we have to remember expenditure method. Expenditure. Expenditure of whom? All the persons, all the individuals, they are spending, they are consuming goods and services, for that they are paying. That is expenditure. Net domestic investment, private investment is there. Government expenditure also there. And goods and services, net foreign investment. These all are adding in expenditure method. So here, the expenditure method particularly, that is incurred on the production of final goods and services, we call as national income. The production of, we can say that, the expenditure incurred, the production of all the final goods, we call it as national income. So the total expenditure of the household sector, business entrepreneurs, and government together, we call it as national income. When we add these together, household and business sector and government, that is national income. That is national income. Measurement of national income in India. What methods we are approaching? What are the methods we are using? When we observe the national income, first calculated by Dadabhai Nauroji in 1867 to 68. There are, various attempts are there. Different methods are there to calculate the national income or to measure the national income. So to estimate India's national income, in 1949, National Income Committee, NIC, was appointed by the Bahal Nobis as a chairman. There was a commission. There was a committee. That committee has, established in 1949. Based on that committee, national income was started calculating or estimating. CSO, Central Statistical Organization, which was established in 1951. And it started estimating national income on yearly basis. Now, CSO calculating the national income. So here we need to remember conventional surveys of national income, that statistics from 1950 to 51 to 1966-67. The CSO had categorized the income in different sectors for estimating purpose. That, on an average, 13 sectors are there that categorized into 13 sectors. The revised series, it has been, adapted 15 breakups of national economy for estimating the national income. There may be different categorizations. Uh, Agriculture sector, forestry lagging, fisheries, mining and quarry, large scale manufacturing, small scale manufacturing, construction, electricity, gas, water supply, transport and communication, real estate, and public administration and defense. Other services also there, external transactions also there. What are the difficulties while calculating the national income? So there are different difficulties are there for calculating for estimating the national income. So one of the important difficulty is that problem with non-monetary transactions. Non-monetary transactions. So the first problem in national income accounting that relates to treatment of non-monetary transactions such as service of housewives to the members of the families. Problem of double counting. There is a chance to count the same mode in 2 times. Double counting. That is the reason why only final goods and services that should be included in the national income accounting. But in generally, it is difficult to distinguish between final goods and intermediate goods and services. It is very difficult for identifying what are the goods and services are intermediary goods, what are the goods are final goods. Somewhere there is a lack, there is a problem while differentiating this. Problem with underground economy. Underground economy that consisting of illegal activities. Illegal activities. But these incomes are not included in the national income because these activities are illegal activities. They are not informing to the government or authorities how much they are having income, how they are getting income. This type of illegal activities are not included in the national income. This is also problem. Problem with tinny and petty production units. There are, large number of producers, petty producers. It is very difficult to include their production in national income because they do not maintain any account. These petty production units, they're not maintaining any kind of data. So it is also problematic. They're not maintaining any account. They're not maintaining the transactions data. So that is also. And also it is difficult to assess the public services. It is difficult to assess the public services. So another problem with the public services, like what we can say, administration policy, police services, army services, there is a problem to assess their service. So it should be included in the national income or not. It is very difficult to evaluate their services. So we have to add that service, but it is not difficult to define the services. So it is very difficult. That is also one. Another important thing is that, problem of transfer of payments. Problem of transfer payments. As we know, individual persons They get pension, unemployment allowances, interest on public loans. But these payments create a difficulty in measuring the national income. They are getting benefit. It is adverse effect on the national income. We are not included in the national income. So these earnings are part of individual's income because as they are getting monthly like pension, as they are getting unemployment allowance, as they are getting interest rate on their loans, right? So these are part of individual's income. They are also part of the government expenditure. Government is spending, they are getting benefit, right? So this is also one of the drawbacks. Importance of the national income. Why we want to study, why we want to calculate, why we want to estimate the national income. There are different advantages are there to understand the performance of economy, to understand the performance of economy. So one of the important one is, the importance is that assessing the economy. Modern days, national income, particularly it regarded as an account of economy. It indicates the potentiality of the nation. It try to, you know, give a statement whether the country is developed country, whether the country is underdeveloped country, whether the country is developing country, based on this data. We can assess the economy. We can predict the economy. That is one advantage. The another one is national income, which is on the basis of economic policies, such as employment policy, due to statistical, enable us to know the direction, individuals' output, investment and savings. The proper changes are measures that can be, adapted to bring the economy to the right path. National income, when we observe, when we study, when we estimate, we can take the economic policies, decisions. Okay, that is advantage. For economic planning, it is essential that the data pertaining to the country's gross income, output, saving and consumption from different sources that should be available to the country. In the present age of planning, national data are great importance. Economic planning purpose, it is more useful. The economists propose short run as well as long run economic models. Long run investment model in which the national income, the data are very crucial and widely used. National income data, which are very used in research scholars and policymakers. They can use in various data. It may be output data, income of individuals data, income of the country, savings, consumption, investment, impact, employment. We can obtain, from the social accounts, this kind of data from the social accounts. This is one advantage. The another importance, national income data is significant for countries' per capita income. which reflect the economic welfare, and the standard of living of the people of the country. This national income data, it when the national income is high, what does it mean? Per capita income also high when there is a population is less. Okay, so we can come to know that economic welfare of the economy, we can easily identify. Okay, and also with the help of national income statistics, with the help of national income data, the distribution of income in different sectors of the economy, we can count from the data pertaining to the wages, rent, interest rate, and profits are, we can observe the disparities in the income, disparities in the income. This is all about the national income. Next class, we'll discuss about the circular flow of income. So I'm trying to stop here. Is it fine?
Yes, sir.
Fine. ఇంపార్టెంట్ క్వశ్చన్స్ మాత్రం అవి నేను ఇచ్చినవి అది చదువుతా ఉండండి, అవి మీకు హెల్ప్ అవుతుంది.
Yes, sir.
మాక్సిమం అవే క్వశ్చన్స్.
Yes, sir. Thank you, sir.